Hello and good morning. I welcome you to the morning meeting today on Monday, the 5th of February 2018. This is Jens Klatt speaking and exclusively presenting this format to you here for JFD Brokers as their global head of research and education. So we want to have a look at the markets, how things are developing here in the or on the first day of trading of the week. It's the day after the NFP, so on Friday the non-farm payrolls came in quite strong, even though I think we have to admit that the euro presented itself quite good, quite positive. The DAX is still under pressure, so right now we are fighting with the, before we start with the euro USD, first have a look here at the DAX. So it's fighting with its 200 moving average, simple moving average here. As you can see, the market here has seen two very deep red candles starting on Thursday and accelerating on Friday then. And also today, obviously the DAX has some serious trouble to make it back at least towards here at this level, around 12,700 points. There are some attempts, that's quite clear, as you can see here. So right from the start, we opened with a sharp gap lower, pushed back towards and slightly above 12,700 points, pushed again towards the lows. Then we're capable of stabilizing. Again, we're sold now. So there's no real willingness to be seen here that market participants are now jumping in the action, saying, hey, why not trying to buy some cheap stocks here and pushing markets higher. But instead the market has some serious trouble to make back at least some of these losses here. Let's just see how things develop then with the US equity markets, because the thing is, all in all, even though this looks deep bearish somehow, this candle, and we are probably having still some room on the downside, so we're probably not yet done on the downside. Nevertheless, it's clearly obvious that the market is losing some steam, at least in the DAX here, compared to the other days before, where there was serious and continuous pressure, selling pressure right from the start into the trading day. So the interesting thing here in terms of the Dow Jones is that I mean, to be honest, I really doubt that we have now seen the big break on the downside. We have to remember that this event here, which took place on Friday, is sure very probably kind of a wake-up call, and market participants are very surprised to see that much pressure. But it's based on the fact that we haven't seen such selling pressure for over a year now. So from the highs from last week till these lows and some further lows here in the pre-opening phase in the Dow Jones, we now dropped something like 4 or 5% or so. We haven't seen this till the election of Donald Trump in 2016 in November. So with this in mind, and with this parabolic developments taking place in the Dow Jones over the last months and over the last year, I mean, sure, such a corrective move looks brutal. On the other hand, it's healthy, and probably will make it further down here towards 24,900 points. Nevertheless, I wouldn't be surprised to see at least some attempt here to stabilize the market, which could then also stabilize the DAX probably. Not sure how far such a corrective move would go. Probably we're already finding some serious resistance here around 12,800 to 850 points, probably making it slightly higher towards 13,000 points. But we should all the time be aware that the bears obviously took over, and not necessarily in the Dow Jones, so depending on how things develop the upcoming days. But the DAX also, and mainly based on the fact that the euro is still very strong and can hold its current level, even due to ignoring the good data set around the non-farm payrolls last Friday, we have to say that this is definitely not a sign which is really positive. And it looks as if that was a faker to new all-time highs. And if the pressure continues in the US equity markets, US equity markets probably can stabilize, but nevertheless see another leg down in the upcoming days then. While the euro can stabilize on an elevated level, I think there's no other option than to see the DAX going down as low as 11,900 points and taking on some serious pressure here in the upcoming weeks then on the downside, and so that the bears definitely take over. Yeah, and so on the hourly chart, that's where we can see that what I'm talking about. Yes, on one hand we are very extended on the downside. Nevertheless, a pullback, which would be quite much already here, of 350 points towards 13,000 points, is a potential short trigger if we can make it above 12,800 points, if we make it above that level at all. Because this is the thing, if we are now zooming into this chart here, stepping back, you can see that if there's further pressure, we could easily drop as low as 12,270, 300, 350 points here on the downside. There was a series of highs here, which acted as a resistance line, which was then taken out here in September. And yeah, it's probably we're not yet done on the downside. Let's just see how the US equity markets come in. Some might probably wonder if there's a chance to trade the DAX today. I stepped back. That has one reason. My system would have been short, and I decided not to take any short engagements here today, since I could imagine the market really to find a short-term bottom here and then see a push on the other hand. So currently I'm flat in the DAX, and yeah, that's all I have to say in terms of trading from my trading account, or for my trading. If the market can find a support right here, probably it's worth to give it a try to go long the DAX against these lows here, with the target of making it above 12,750 points, and then probably heading higher, probably going for 12,800, 820, 830. But this highly depends on the US equity markets and how they start into the trading day. So let's have a look here at the euro. As you can see here, we can stabilize. This is a daily chart. We can also go down here to the hourly chart. We can stabilize on an elevated level, and this is again surprising, since the non-farm payrolls came in really good. We had a reading of 200,000 against 175,000 expected. That was already above expectation. And even more interesting was the year-on-year average hourly earnings, which came in at 2.9%. And that was significantly above the consensus of 2.5%, and was capable, or you usually would expect it, let's say. The US dollar really performed well after this aggressive sell-off here, accelerating with the comments from Steven Mnuchin here in Davos last week on, no, the week before here. Now the thing is, yes, somehow it looks as if we start to stabilize here. It's a green candle. Yes, that's true. Even though it was mainly the dollar performing well against the Japanese yen, making back some of these losses here. By the way, the Japanese yen could gain some momentum overnight again. That was due to the fact that Asian markets came under pressure. We pushed back above 110 here in dollar Japanese yen. But, and this is something worth mentioning, it was only against the Japanese yen somehow. Probably there was also some positive impulse here from the pound sterling losing some ground against the greenback. But all in all, it seemed as if the euro can really withstand any pressure. So have a look, for example, also on Australian dollar. Here was a huge and aggressive sell-off and a massive drop below 80 here again, and the euro had no real problem to hold these high levels, elevated levels against 125, 24, yeah, 25, 24, 24.50 probably. And that's I think a very bullish sign, a very positive, a very strong sign, and there's a good chance that the euro can easily make it higher from here, probably take another stint towards the region on 25.50 here, the highs from the ECB meeting not last week, but the week before, last week, but the week before, on Thursday, 25th of January, and then probably going for 128, 128.50 here on the upside. And with this in mind, this is also something which could and should be considered bearish for the DAX, and should usually weigh more heavily on the German equity market. So that's it on the on the euro here. Now your question might be, okay, how can we position ourselves here? Right now, I'd be a little careful, but again, longer time frames, I'd consider long engagement with a break above 125, 125.50 here on the upside. So everything which is pushing us above the highs here from Friday, that was a relative. No, it's in fact it's a swing low. If we're pushing above 125 again, then the next target is 120, 125.30, 125.50 around, and so I definitely prefer long engagements instead of short engagements. We already had a look here at dollar Japanese yen. So in fact, we triggered an exact region. I made a topic last week. Some might remember that. I had a webinar last week and I said 110.30, 110.50 is probably a good region to take short against, short positions against. And so far it looks good, but let's see whether we can take on new momentum from here again, if real risk aversion hits, or if the market can stabilize. If so, then probably the dollar Japanese yen can take on the momentum from Friday and probably push towards 110.80, 111. Yeah. So that's it on a dollar Japanese yen. Let's have a fun look here at gold. So gold is very interesting. So gold, in fact, reacted bearish, lost more than 1% on Friday on the good NFPs. But, and this is the thing, we did not push below 1,325 USD here. 325. But in fact, stabilized slightly above that level. I consider this to be strong. And I think that probably it's worth to give it a try here to position ourselves long against this region in gold. And we are currently trading at a quite interesting level, 337 around. That's a short-term level. If we can make it above that, then probably there's further room on the upside for gold in the upcoming days. But this also depends somehow a little on how the US dollar will perform. And again, the US dollar is very, very extended on the downside and looks really, really about to make a small comeback at least, and then push back above 90 rather sooner or later. This could then hold the gold bulls a little back. Nevertheless, all in all, my midterm outlook for the US dollar after comments from Eugene is definitely bearish, while gold is on the other hand, and as a negatively correlated asset to the US dollar, is considered to be bullish then. And yeah, so that's it from my end. Happy trading. Watch your stops. Talk to you again next week. I'm sorry, next week. tomorrow 10:30 a.m. GMT. I definitely look forward to it. Wish you all the best. Take care, and see you tomorrow. Bye bye.